So mobile digital loans feel like a lifesaver, doesn't it? But do you know, it puts you in a cycle of debt that is sometimes hard to break. The way we liken it to people who gamble, because you are borrowing to pay somebody else and you're borrowing with very high costs, and digital loans have become really unscrupulous over the past few months, over the past few years, and it just seems like they're getting worse and worse. So the first one is we become so dependent on instant loans. The way currently the economy is, previously where we could be able to still live by our salaries, just under one pot. Now we have to increase where we are earning money because, the cost of living seems to be increasing on a day-to-day basis. And especially if you have a family, you have children, or your parents still really depend on you, it becomes a real balancing act between your finances, your salary, you leaving your children, having to go to school, and still being able to assist your parents. And that calls for a lot of grace. And it also calls for a lot of, sometimes just self-empathy, because you're handling and you're juggling a lot. But sometimes we find that where our salaries are unable to cater for, we end up taking instant loans, which is not good because we find ourselves every month we are in a cycle of borrowing money, a cycle of debts, and these debts are coming at a very high price. Currently, even in banks, the interest rates are up from what was 13% to 15%. And they are not going down as fast as most people expect because of so many things that are happening in the world economically. So apart from dependence on loans, because you are unable to pay, you find that you are blacklisted on CRB, meaning you are unable to borrow because that which you've borrowed you are not able to pay. And you find yourself you are going to your family members to borrow. And if you're not able to pay loans and M-Shwaris and, things of that nature, you find yourself unable to pay even your family members, which sometimes causes a lot of friction where somebody was expecting the money or your family member had to sacrifice so that you're able to get the finances as you had asked. And it may also breed unforgiveness and sometimes enmity within family members. Then sometimes you find because the loans are so much, you are never able to catch up to your last payment. You think you've paid, then you find yourself, I had another deni somewhere else I haven't paid, or I had another facility I didn't remember to pay. So what can you do when you find yourself in the cycle of debt, in the cycle of high digital loans? Number one, you relook at your finances. You go back and see, so what is this in a month that I spend frivolously? Sometimes you're the kind of person who is an impulse buyer. Maybe you see something, you automatically buy, or maybe, you can't say no to requests for people who are asking for money, so you always give out. And sometimes you can't, also has to go down to those parents, especially if you're somebody who has siblings and siblings who are also working, then those siblings should also be able to support them from time to time. That it shouldn't look like it's just you who is providing all the time. Number two, if the issue is the lack of ways in which your family members can be able to sustain themselves, then you can decide if it's a parent and both of them are good with money, or you can show them how to invest, do a small business, even if it's a vegetable business, so that they can be able to at least try and increase their incomes from time to time. Then, of course, you can switch to saving groups. You can, for example, if you have a big goal of possibly buying a vehicle or building your own home, even if it's a semi-permanent structure, you you can decide, okay, maybe if you're in employment or even if you're not, depending on the amount of money which you are paid, you can put maybe 5,000 or 20% or 10% in your SACCO savings, which are going to be deducted straight from your account without your input, so that you don't feel like you have no money constantly, that it's just being deducted. And then you just take maybe 6 months or 3 months to determine how well your savings is, or you can even do Chamas, though personally, I haven't delved in saving through Chamas, but I hear from others that it's a good investment, because when your round comes and maybe you have planned, you have saved for it, you can be able to purchase something that you wanted, or you can pay your school fees with that, your kids' school fees with that. It can also help you to even pay on your rent, so that that amount of money that is going to go on your rent this month can be used for something else, or you can even use it and put it in your SACCO savings, or you can also put it in an investment account. There's so many money market funds. Money market funds aren't there to make you rich. They're just there as a way for you to be able to learn how to save and see your money grow in terms of interest rates, at least yearly or monthly. Then you can also use what I call the debt snowball method, whereby if you have, say, 5 loans coming up to maybe 20,000, and you have one for 800, you have one for 10,000, you have one for 5, you have one for 3, you have one for 2,000, etc. You can start with a smaller one, 800, clear. You clear, maybe at the end of the month, you're able to get 10,000. So you can clear the smaller loans so that you remain with the 10,000, so that now you can budget for it the other month, or you can pay 5,000 now and 5,000 the other month, and you are able to clear the balances with a bit of peace of mind. So tell me, what's the highest interest you have ever paid on a facility, and what strategies do you plan to use or have you used to be able to curb the issue of too much debt uptake? And what advice would you give anyone who is struggling with this? So thank you once again for watching this video, and I hope to see you in the next one. Goodbye.